the 30-year mortgage rate is now 8%. Wow.
Yeah, crazy week. And really, if you zoom out, it's been a crazy 2 years. We've
Yeah,
gone
amen.
from
Amen.
in just over 2 years, we have went from one of the more affordable markets in history to one of the more expensive markets in history, and the most expensive in at least like 30 years.
Folks, it's official. It's happened. The one and only Lance Lambert sent out a tweet yesterday saying that the 30-year mortgage rate is now 8%. Wow. That was quite the tweet there, big boy. What's going on?
Yeah, crazy week. And really, if you zoom out, it's been a crazy 2 years. We've
Yeah,
gone
amen.
from
Amen.
we have gone from 2020, 2021, when affordability on a historic basis was actually relatively cheap. On a
Oh,
historic
it
basis,
was in the top.
again,
My 53-year spreadsheet had it in the top five best affordability.
yeah, yeah, exactly. And that was even with the price growth when you factor in incomes, mortgage rates, and prices.
Yep.
And within just over 2 years, we have went from one of the more affordable markets in history to one of the more expensive markets in history, and the most expensive in at least like 30 years.
Mm-hmm.
And the speed of the change here has just been dramatic from 2, 3 handle mortgage rates to 7, 8. And I know the average is for people who have better credit scores. So there are some people now pushing 5, 8, 5, getting closer to 9.
Yeah.
It's,
If you're an investor, not without perfect credit, you're probably in the nines.
yeah, it's crazy to see what's happened.
Yeah. So I guess the big question is, kind of where we go from here. And again, I think the real interesting factor, because I'm kind of a data guy, not quite like you, you're next level, but we have higher rates heading into the winter, which is the slow seasonality. We still have, really low inventory. What's going to win out is I think listings go up, but is that just days on market expanding? Do we have, I know we have more cancellations. I've talked to people in the last 48 hours, cancellations are up, but where do we go with inventory? Because I'm even hearing some sellers, they're taking the properties off the market. Like, we'll just wait for the spring. It's going to be a
Well,
wild
so
winter.
one thing that me and you have both talked about all year is that there's a headwind in the market, which is affordability, and there's a tailwind, which is tight resale supply. And then there's the element of seasonality. And we've kind of talked about the fact that because of the headwind and tailwind being so strong, like you can have it to where seasonality, you feel seasonality more than you
Correct.
usually, like it feels abrupt, the shift between the season. And it's possible that could be what's going on, right? Like, yes, mortgage rates getting up to 8% here versus 7 or mid sixes. Yeah, that's of course, made affordability worse in the pinch. But I think a part of this is we're feeling the seasonality effect of a
I think
market
that's
that
right.
has terrible affordability. And then next spring, we don't have resale supply.
Oh,
Um,
yeah.
so it's one thing and I don't want to make predictions, but I'm going to stick to what we've been talking about, which is that the shift between seasonality could feel more jarring in this type of
I,
environment.
I think you're
And
right. And again,
the other thing
data
here
backs it
has
up.
been that rates have also acted along with seasonality. Rates hit their highest in the weakest part of seasonality last year, and then
Did
rates were their lowest, 5.99
I
in
remember?
spring, and then now here we are testing 8 during the
Yeah.
soft seasonality. So that's making seasonality feel even more abrupt, the move into it.
Yeah.
Um, and so I think it goes to, back to how the market has reacted to rates, which is number one, there is going to be very few resale transactions occurring Q4. There's just not going to be many resale transactions occurring. This is essentially a deep freeze for transactions. I don't know how low you can actually go, but we're probably going to figure it out.
Yeah. No, I think
Like,
that's exactly right. I think that's what I've been trying to highlight the last month is, until this morning, which NAR put out their numbers this morning, the cycle low was January, which was 4.02 million. We just hit a new cycle low at 3.96. These are existing home sales. We're going lower. The next 3 months, to your point, we're going to find out how low we can go.
Yeah, yeah, that's what it looks like. And now you can only kill churn once, which is somebody who wants to like sell their home and go buy something new. They've already been out of the market. So you can
Yeah, they're
only
not.
take
Yeah,
them off once, right? So the people left are like the death, divorces, you know,
yep. Job
job
transfers.
relocation,
Yeah,
they couldn't
yep.
stop, stuff like that. And then the purchases are, the other side of that lifestyle bit. And then, first time buyers who are like, rents are still moving up, prices haven't come down, kind of accepting it and biting the bullet, so to speak.
Yeah. I think that's what a lot of people kind of in the doomerville of Twitter don't understand, or X, whatever we call it these days, is even in the worst of times, even in the most unaffordable market, which at least to date has been 1981, this year could beat it. I don't know yet. The year's not over, but we still did 2.5 million transactions, right? You still had death, divorce. You still had motivated sellers. You also had creative financing. What people don't realize about the 80s is Robert G. Allen, Carlton Sheets, all these guys, they cut their teeth. And I just interviewed somebody yesterday who was started buying in 1981, and you had to get creative to get deals done. So there will be motivated sellers that need out, and you know, sometimes it'll be sold on terms versus price. So
Yeah,
it's it.
I think that's it. Now, one thing that you do know is that if you're buying in this environment right now, and I'm not talking about next spring, I'm talking about right now, you know that that seller is probably motivated. Because why are they selling right now?
No, no, I've been screaming that. I want people that follow one rental at a time that are doing the work to realize what you just said. If there is somebody selling a property with mortgage rates at 8% and days on market are growing, they're likely motivated.
Yeah.
So do do your best. Find the deal that makes sense. And I'm getting notes almost every day from people that are getting 10, 15, 20% off the list price. You know, you can make it work. I don't care what the cost of capital is. There's some number that works for my buying criteria. Right? That's how I see it.
Yeah, and so the thing I'm keeping an eye on is where does active listings get to? And I think you look at that on your market, and does it
Yes,
continue to grow into November? That would be a little bit of a signal of more market weakness
I
heading
agree.
into next year. And then the other thing is where do these rates go? This has
Yeah,
actually been kind of, I mean, it's been a little weird the past few weeks, like this
yeah,
recent run up, and you can tell that people are starting to get surprised, and it's not like just us getting surprised. It's like some of the Fed members,
yeah.
where that one week they all kind of came out and said, "Hey, we're probably
We're
done with the
done.
hikes.
Yeah,
You guys have done our work for us, blah blah blah." So
yeah.
let's see where this bond market goes.
Yeah, I've been calling the Fed the big bad wolf. I've been telling a story that I wanted to talk tough. The big bad wolf is sitting in a lounge chair drinking an iced tea now. They're done. The market's gone up now today, I think like 48 basis points since their Fed meeting. The market's done almost 2 rate increases for them.
Yeah,
They're done. They're not raising rates.
on no data. Like there's
No
not that
data.
much data that's been like, oh, that's like jarring. Like the narrative of the economy hasn't shifted at all, but the
No.
bond market has gone in on this run,
Higher
which
for
is
longer. They get it now. Higher for longer.
yeah, which is something still to keep an eye on.
Yeah. So at the end of the day, you're going to be watching active inventory by market.
Yes.
That's what you, yeah. I'm actually most interested in days on market because for
Okay.
me, days on market is, again, you got to remember I'm a buyer, right? Is going to be
Yeah.
the sign of stress. The longer inventory stays on, that is my key. Days on market.
One
Um,
reason I don't is the data that I get days on market from realtor.com.
mhm.
It kind of feels like it takes a while to get moved up. Like right now,
uh,
it's still very low. And so I feel like actives, I've always gotten a better pulse of things like that
yeah,
move, if that
yeah.
makes sense.
No, it totally makes sense. And again, you're looking at data across the country. I'm looking at data in one market, right? That's very different. You're macro, I'm micro.
How
But
much up is your days on market versus now versus the spring?
About 30%. About
Okay.
30%. And then if you go one level deeper, back to our earlier conversation, days on market below the median, days on market above the median, days on market above the median's up 50%.
Yeah. And when does yours get when does days on market stop? Is it once it's pending for your market?
Once it's pending, yeah. Once
Yeah,
it's
see,
pending.
realtor.com, I think it goes to like the sale. And
Yeah.
it's like, it's a much bigger number than like the NAR number. Yeah.
Yeah, I still think it would be interesting because as long as it's the same calculation every time, it's I don't
Yeah,
really care what the number is. It's the change. It's the net change.
exactly. And that's what it is, yeah, days on market from realtor.com works, but it just takes longer to get it in. Like
Yeah,
it's going to be up 30%
right,
from the low of the year, but
right.
it's not going to get it for a while. But
Yeah,
active come
it's
right away.
stale. I
Yeah.
get it. I get
Actives
it.
calculated by realtor.com subtract pendings,
Got it.
which is which
Makes
is why.
total sense. Yeah. Yeah. Well, at the end of the day, folks, housing, housing, housing. If you have not signed up for Resi Club at Resi Club Analytics and you watch one rental at a time, I have no idea what you're doing. There should be 50,000 subscribers from one rental at a time at Resi Club Analytics. Just put your email, get 5 things free. And then if you're serious, check out Resi Club Pro. Anything else to say, Lance, as we wrap up?
Yeah, well, so I want to pose a question to you. And if you want to
Okay.
put this into a different segment, put it into a different segment. That works
It's all
for
right.
me. But one thing that we've seen over the past 2 years is that groups like the Mortgage Bankers Association and Fannie Mae and a lot of other groups that talk to like mortgage brokers and out to the public, anytime mortgage rates have went from like 3 to 4, they've been like, oh, it's not going to stay. 4 to 5, it's not going to stay. 5 to 6, oh,
Yeah.
this is just temporary. 6 to 7, this is just temporary.
Yeah.
If buyers and sellers had known the past 2 years that rates would have done this,
Mm.
would there have been more transaction churn already over the past 2 years?
Ooh.
The psychology. Now think about it from that side, where they're like, one thing that occurred is because everybody kept getting told that rates were going to come down, is that it
Right.
discouraged transactions, right?
So let's
Now,
play this out. I love so I can play this out pretty quick. So let's take the segments because I always think there are 3 segments of buyers.
yeah,
First time home buyers, they would have been more aggressive, no question.
yeah,
Move up sellers, which are the ones that are frozen today. Do they buy? Do they sell and buy thinking that rates will be up 400 basis points? I think they do.
more
I
aggressive
think,
than last year.
yeah, more aggressive than last year, no doubt. I mean, that would be hard
Yes.
to be less aggressive. But I think it would be meaningfully more aggressive because what they're going to be saying is, hey, let's sell our home that we have equity in that is very liquid. Let's take all that equity here. Yeah, I know we're going to sell a 3, but we'll buy a 6 before it gets to 8 when it's unaffordable. So I think there's a good segment of the move up buyer. It's probably 30% that make the move that didn't make the move because they thought they would come back down. And now they missed the boat, right?
Yeah.
Because now it's just flat out unaffordable to move.
Yeah. And so now if you flip it, one thing that telling everybody that rates are going to go lower does is it incentivizes people who do make the churn in this period to think that, oh, I could refi quickly.
Oh, I
Because
hate that.
come
Yes.
to brokers and real estate agents already saying, hey, I'm going to be able to refi this in 6 months.
I hate
So,
that. I hate
okay,
that.
so
Yes.
maybe the effect I said took off some transaction volume. But then this effect, which is that feeling of, hey, if I go out and do this, I'll be able to refi quickly, maybe canceled it out. That's where I've been kind of debating this. If
I think the latter is 5%, 10%,
yeah,
where the other is 30. I think it's more meaningful than. And again, if you're in at 3 and you know they're going to 8, you might make the move at 5 or 6, but you simply don't make it at 8
yeah,
today. So yeah, it's pretty crazy. That's
yeah.
fun. That's a fun brain teaser.
Yeah, it was a fun one. And the reason I thought of it is because I was kind of wondering if these groups like Mortgage Bankers Association, because they've been accused of being like, too
Kelly
much
on this, yeah, yeah.
broker side, if they actually were doing a disservice to brokers because there
Oh,
could have been more transaction volume, one. And then two, if you have too many people in the industry holding out for false hope, that
right.
hurts people, the players who are in it for the long game. Because there
No,
does need to be some employment churn out.
no, I
It's
agree.
go from that high transaction volume to an environment where we're not going back to the pandemic highs for
No,
transaction volume. It's
no
just
doubt.
not.
Not no for years. We're not going back there for years. Resi Club Analytics, folks, go there today. Put in your email, get 5 newsletters a week. Lance, you're amazing, buddy. Take care.
Thanks. Bye.